How to invest in real estate. One of my favorite topics, being a real estate millionaire in 1999, that happened. And we're going to talk about a few things. Number one, why real estate works. It is one of the two categories that every entrepreneur wealth builder has, which is they own a company and they own real estate. It's almost notoriously the same. So where do beginners start? Let's have a conversation about that. And then the last thing is how to avoid a lot of common mistakes. And I can tell you it starts with a mentor. I wouldn't have done what I got done in 1999 without phenomenal mentors and really joining someone else's team. I think you all know by now, after being on this channel, if you aren't on this channel, you need to subscribe, click the notification button, be here all the time, and get caught up. You can always go back and listen to a bunch of playlists and different topics because we are going on our over more than 4 years of videos every day, 5 days a week. And real estate is a huge, huge piece of what you can do and need to do. And having a mentor is vital to your success. Why? Because I actually joined a team. I don't believe in self-made millionaires. They're team-made millionaires. So I joined another team knowing that I had a big database from having worked in the Rich Dad, Poor Dad and selling cash flow games. So I had about 18,000 names and they had been financially educated. Many of them are on financial coaching. My point in sharing that is I joined a team that was already successful, already up and running, and I knew what asset I could bring to the party. So through that database, they helped and they actually raised the capital and we did it that way. So there's always a place that you can start. So if you think about what you are doing, do you have money? Do you have credit? Do you have a database? Do you have the experience, the street experience, the management experience, commercial real estate? So do your own assessment and where you could merge into a team. Now, one of the gifts I'm going to give you early on is I'm going to give you the first chapter of my real estate as leverage. It's 8 hours of me talking to you through about every way that I did the strategy, how I set corporate structure, how I did the bookkeeping. It's really, really robust program. And I talk about how I became a millionaire using that team-made millionaire approach. Now, real estate, as you all know, has cash flow, has appreciation, it has leverage, and it has huge tax advantages, especially now with the big, beautiful bill and effective July 4th of 2025. Legislation is phenomenal around what you can do for bonus depreciation, R&D credits, the Augusta rule. There's so many vital tax strategies to owning real estate, not in a REIT, not in a stock kind of a portfolio, and not in like a Reg 8 or crowdfunding. This is where you're going to own it. You're part of the team that owns the real estate and the street. The key is not to speculate. It's to buy revenue producing properties. So if cash flow is your goal or appreciation is your goal, and typically you want to say both, then where do you start and how do you do that formula? So further into that real estate is leverage program, it talks about cash flow analysis. How do you do appreciation? By really smart prediction and market analysis versus, again, speculation and emotion. Too many people buy on emotion. I'm a woman. I'm going to pick on you a little bit. Remember, this is not your home. This is just a house doors, I call them. It even keeps it farther away from you. These are doors you're buying that need to produce. They need to appreciate. And there's all sorts of ways you can force appreciation, and they need to cash flow. So why real estate works? Let's give you some statistics. I have some great new statistics as we are now in 2026. 90% of millionaires have invested in real estate. Real estate provides inflation protection through rent increases. Tax benefits include depreciation and deductions. So why do real estate? And how do you enter into the real estate markets? You can do short-term rentals. A lot of people advise you to do wholesaling, which is where you're going to find the seller, you're going to marry it to the buyer, and then take a margin in between. That actually is more challenging than you think unless you have databases of sellers and buyers and you know how to bring the real estate to a close. And if you don't know the contract, you know the paperwork. Personally, I think fix and flips is the easiest beginner way to get in. You're going to buy a property, you're going to fix it up, you're going to flip it, and make sure your cost analysis really works. And as you start doing that, you could flip one, you could keep one, you could flip one, you could keep one. I think a lot of you, if you've been really looking at real estate, you know how to do this. The newer kid, and it's not really new, but it's new to a lot of you if you're a beginner, short-term rentals, where you're going to buy and do short-term. Now, the difference between obviously a long-term and a short-term is the way it's taxed, number one, is very different, but you have a lot more management and a lot more activity in the short-term rentals, and you're probably going to have more TIs, which are tenant improvements, because of that. So another area you can enter, I mentioned it early, a Reg A offering. It's equity crowdfunding. There are some really brilliant projects where they let you actually put $500, $1,000, $1,500, $2,000. So it allows the real beginner to get started. Personally, I'm not a huge fan. As somebody who's going to offer a project, it's a lot of investor management. So you've got to have some really good fintech, right? Financial technology that can actually hold that many non-accredited and low ticket investors, meaning they only have 500,000, 2,500. To really start at a bigger level, you're starting at $25,000, $50,000, $100,000 investors. So up to you how you want to play. There's also REITs and syndications. So they're different. So syndications, again, where you're going to own a percent of the property in the streets. There's a lot of syndications also for gas and oil kind of projects where you own the capital working interest of the well. REITs are usually typically through the stock market, where you're going to buy a real estate investment trust, and it could be a pool of different projects. Typically, those are commercial projects, but then you don't get the depreciation because you're going to get the capital gains in the stock. So it depends on what's your tax strategy. Do you have a tax strategy? And personally, I think strategy and your tax plan need to lead in where you're going to go. If you talk about the markets, I think there's markets everywhere. Personally, the coasts are much higher price tags to get in. I personally have always bought in the Midwest for the most part. I would say the majority of my career. My Millionaire market was Oklahoma City, Norman, Oklahoma, that area. I have a lot of property in the Ozarks, the Missouri, Kansas, Nebraska. Ohio's a great market, Indiana. So again, you got to pick your strategy. How are you going to enter into the market? Who's going to be your mentors? I have amazing millionaires. I'd say in our big table, the majority of our millionaires, especially in the early days of our 25, now this is our 26 years of the big table, was making real estate millionaires, because that's what I was. We would take you out to the streets, we take you on tours. So real estate, I think for most of you, especially if you're a high income earner and you need a depreciation schedule against your high income, getting into real estate, I'd move commercial personally, now that I've walked through all the stages. There was a time, I think we were in 29 markets, I don't know how many hundreds of people, and it was all independent ownerships, and we were managing it. We had property management companies, we had the hauling away companies, we had staging companies. So it depends on where you want to get in. And it depends on what you want to do. It depends what your needs are. And I think a needs assessment is what you are going to have to start with. So to do that, I'm actually going to give you a free download of the book. We just put a version 2 out April of 2025. Do the gap analysis and let us look at your gaps. Look at your where you are, what we could do to support you, and what kind of coaching, mentoring we can do to help you get on track to become a real estate millionaire. We've made so many of them, and they're super sustainable because they have good systems, they have good bookkeeping, they have good tax strategies. So when you look at your deals and you look at your analysis, you want to make sure that you are in an appreciating market. Some of you might be, some of you might not be, but cash flow needs to at least cover expenses so you have some break even to that. Leverage is going to help you expand and go bigger. So if you think about it and you say had $100,000 to put to work, would you rather do one property or two properties with $100,000? Or would you like to find up to 10 partners and you could all put a $10,000 in? If you had 10 people all go together in an LLC, you all put 10,000 in, now you have 100, you buy 10 projects. Now you have a blended return. So some, maybe one or two are down for a while, the other 8 are cash flowing. So in our experience, going wider, buying more, and a blended return is the name of that kind of a setup, that's the kind of leverage you're really going to want. Now, again, if you haven't subscribed, click that notification button. Share this with 8, 10, 15 people that you know. You are the sum of who you spend time with, and you know that. So it's time in this year, 2026, to fix that. And to become a smarter investor, have more rules. And to that effect, let me just talk about some of the common mistakes. And it starts with no money rules. So again, you don't want to be speculative. You don't want to do this with emotion. You want to make decisions based on data, on market analysis data, which will then inform you on the appreciation and the opportunity for that. You can also force appreciation, which means you're going to go back in and just do minor updates. Like, what do people that are currently in the, say, millennials or the Gen Z era, what do they like more? Like, do they like the traditional outlets? Like something simple like that, changing outlets, adding a little bit of a wine bar. Very minor adjustments that don't cost a lot, but people will pay more for are critical. And for those that have no parking properties, even putting just a structure up where they can park underneath, so at least it's a covered parking area, is going to allow you to increase your rents just in that one move. So think think about things you could do with the project you have and do your best to get the most appreciation, the balanced leverage, and most cash flow. If you have any questions about joining us, becoming a real estate millionaire, go to askloral.com, ASKLORAL, ask a question, make a request. We'll be back tomorrow.